Ever heard of a company that went from crypto mining in a garage to pulling in nearly $2 billion and filing for an IPO, all in under a decade? Yeah, that's Coreweave, a name you probably hadn't heard of last year, and now suddenly, boom, it's making headlines like it's the next big AI stock to watch. But is it actually the future of AI infrastructure, or just another hot company cashing in on the hype? Let's break it down. Back in 2017, a few former Wall Street traders, Michael Intrator, Brian Venturo, and Brandon McBee, started Coreweave as an Ethereum mining operation. Like let's use a ton of electricity and hope crypto keeps going up. But as the crypto market started getting shaky, they made a bold pivot. Instead of mining crypto, they looked at their massive GPU setup and realized, hey, these things are actually perfect for something that's way more promising right now, AI. So in 2019, Coreweave shifted gears and rebranded itself as a cloud computing provider focused on high-performance workloads. Translation, they basically rent out big-time computing power to companies doing machine learning, visual effects rendering, and all those behind-the-scenes processes that power AI as we know it. Think less Netflix streaming, more OpenAI training its next model, and it's not just any cloud provider. They specialize in GPU-based computing. While Amazon, Google, and Microsoft offer broad cloud services, Coreweave carved out a niche by offering lower latency, faster deployment, and better performance for companies that are really pushing AI boundaries. So how's business? Pretty insane, honestly. In 2022, they made about $16 million in revenue. Fast forward to 2024, and they're reporting nearly $2 billion. That's not just a glow up, that's a warp speed transformation. But here's the catch. Even with that wild growth, they're still operating at a loss. In 2024, they reported a net loss of $863 million. Why? Because they're aggressively scaling. More data centers, more talent, more everything. They currently have 32 data centers across the US and manage over 250,000 NVIDIA GPUs. That's a lot of firepower. And speaking of NVIDIA, yep, the GPU giant owns a stake in Coreweave. They've also supplied them with hardware, and during the IPO, bought $250 million worth of shares. It's basically like NVIDIA is saying, we believe in these guys and we're putting our money where our GPUs are. But it's not all sunshine and stock tickers. Coreweave filed to go public under the ticker symbol CRWB and aimed to raise $1.5 billion. Initially, they were hoping to price shares between $47 and $55. But after market feedback and investor caution, they dropped it to $40 a share. It's still a big deal, but it also signals that Wall Street's a little hesitant. One reason, Microsoft. In 2024, over 60% of Coreweave's revenue came from just one client, Microsoft. And that's risky. If that partnership ever hits a snag, or if Microsoft builds its own infrastructure, Coreweave's bottom line could take a major hit. In fact, there have already been reports that Microsoft is slowing down its purchases due to delays in Coreweave's delivery of hardware. Add to that their current liabilities, Coreweave has around $8 billion in debt. And while they've raised money through private funding rounds and now an IPO, they're still burning through cash to stay competitive. But they're not slowing down, not at all. In early 2025, Coreweave announced an $11.9 billion contract with OpenAI to supply cloud infrastructure. That's huge. They also agreed to acquire Weights and Biases, an AI development platform, for $1.7 billion. These moves show that Coreweave isn't just trying to keep up, they're trying to lead. The real question now is whether they can sustain this growth, diversify their client base, and get closer to profitability before the competition heats up. Amazon, Google, and Microsoft are watching, and they're not exactly known for sitting back and letting someone else dominate a space they care about. Still, Coreweave has a clear angle. They're focused, they're specialized, and they found a sweet spot that's absolutely critical to the AI world right now, raw computing power. So, should you invest? That depends. If you believe the AI wave still has room to grow and you're into infrastructure plays rather than the front-facing tech companies, Coreweave might be worth keeping on your radar. But if you're cautious about companies bleeding money and overly dependent on a few big partners, then maybe watch from the sidelines for a bit. Either way, it's one of the most interesting IPOs of the year and definitely not one to ignore. If you found this breakdown helpful, hit that like button and let me know in the comments. Are you buying into the Coreweave story or are you calling it overhyped?